All right. So, what happens when a single trader drops a $52 million leverage bet directly into the XRP market? High stakes moves like this force the entire market to sit up and take notice. When tens of millions of dollars are placed on a single directional trade, it instantly changes the underlying mechanics of open interest and derivatives exposure. So, why does a $52 million leverage trade carry extreme structural risk? To understand the sheer magnitude of this trade, consider how leverage operates. A 10x leverage controlling a $52 million XRP position requires $5,200,000 in underlying collateral margin. That means the trader has gained exposure 10 times greater than their committed capital. However, because of how derivative maintenance margin operate, a sharp move of 10% against this entry could trigger a cascade toward the liquidation threshold. Now, here's my opinion. Looking purely at the mechanics, this level of leverage on a $52 million trade isn't just standard positioning. It's high wire balance without a safety net. A simple 10% market correction can completely wipe out $5.2 million in collateral in a matter of seconds. Now, does a bet of this size mean the trader holds insider knowledge? Right? Crypto analyst Steph is crypto right here posted about the massive trade here on X, speculating that the individual behind it must know something, right? So let's highlight this part. He must know something, right? Naturally, when market participants see a $52 million order hit the order books with 10x leverage, the speculation immediately turns to upcoming regulatory decisions, legal updates, or institutional integrations. However, analysts trending trading, all right, trending trading. Let's just highlight this part. All right, trending trading. All right. He said he offered another interpretation in the comments. Right. His view is that this could simply be a whale who possesses enough capital to absorb a complete loss without flinching. Right? Now, here's my opinion. Assuming a trader holds undisclosed information simply because they execute a high-value order is a classic market trap. Large players regularly take big directional swings as part of wider hedging strategies or simply due to personal high-conviction models that are just as prone to error as anyone else's. Now, how could this massive long impact broader XRP volatility? When $52 million in fresh long exposure enters the derivatives market, open interest spikes significantly. If XRP begins to move upward, short positions face mounting pressure to cover, potentially creating short squeezes that accelerate buying pressure. Conversely, if XRP undergoes a quick downward shock, forced liquidations can trigger an aggressive cascade of selling pressure. So, in my opinion, this single position acts like a massive magnet for market volatility. It creates a target on the order book that aggressive market makers and spot traders will likely test in the short term. Now, could this visible $52 million trade be part of a larger hedging strategy? Visible on-chain and exchange data only reveals one side of the coin. A trader executing $52 million leverage long might hold offsetting short positions in options market or millions in spot XRP held across private wallets. For retail observers, jumping in to copy a 10x leverage trade based solely on visible order book activity presents extreme downside risk. So, in my opinion, copying a 10x whale position without seeing their complete portfolio balance sheet is one of the quickest way for retail traders to get wiped out during routine market volatility. And finally, for our overall conclusion, a $52 million XRP long position with 10x leverage represents a substantial market signal, but it is not definitive proof of advanced knowledge. While the trade dramatically increases derivatives open interest and heightens the potential for liquidations in either direction, it may simply be part of a broader, multi-layered hedging strategy. Traders should evaluate the surrounding market structure and liquidity conditions rather than assuming high-value leverage trades guarantee a price increase. Alright, and this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.